Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Monday, May 17th, 2021, and I'm pre-recording this Trading Places Live for Tuesday, May 18th. Futures currently rebounding, looking pretty good. The Dow Jones Industrial Average futures currently up 121 points. S&P 500 futures up about 12 points, and the NASDAQ up about 53 points. So it does look like, at least at this point on Monday evening, like Tuesday could get off to a good start. Of course, things can change overnight, so we'll see how we wrap up there. Before we get into all the, well, let me go ahead and just give you the agenda for today, and then we'll get into a few other things. We'll start off with the daily market recap, then we'll get into talking technically. I want to go over the metals today. So gold, silver, copper. Take a look at those on a short, intermediate, and long-term basis. Then we'll get into break it down. I want to check on the red hot energy group. Go through and show you how the sector and its various industry groups are performing relative to the S&P 500, and then show you how at Earnings Beats we use our research platform to identify stocks, whether it be in energy or other groups. But we'll show you how to use those chart lists. Then we'll get into the earnings spotlight. Number of companies will be reporting later this week. I know things have really cooled off quite a bit, but there are some big reports coming out later in the week. Talk a little bit about that, and then we'll wrap up with the three you must see. But before we get into any of that, let me take you over to earningsbeats.com, where you can see we have a free Earnings Beats Digest newsletter. So if you are new to Earnings Beats, we'd love to have you join. Simply type in your name, email address there, hit that subscribe button. We'll deliver a published article to you every Monday, Wednesday, and Friday morning before the market opens. You can unsubscribe at any time. It's completely free, no credit card required. We'd love to have you. Looking at the action on Monday, Dow Jones Industrial Average lost 54 points. It was down a little bit more than that, bounced off the 20-day moving average, did finish near the high of the day, so that was good. The S&P 500 also down, testing its 20-day moving average, but did finish near the high of the day. Still lost 10.5 points, though, but at 4163, so still above the 4100 level. NASDAQ, which has been much weaker, especially here in the month of May, lost almost 51 points. So on a relative basis, the NASDAQ did trail both the Dow and the S&P 500. Mid caps and small caps performed a little bit better. Mid caps were able to close just above their 20-day moving average, losing just 3 points, or a little bit more than 1/10%. Small caps were down earlier, but actually rallied back, closed at the high of the day, up 0.15% on the session. So nice finish on both small caps, really across the board, all the major indices. And the one thing I really like, when you get these days where you close at the high, the volume is positive volume for the accumulation distribution line. So you can see, for instance, on the small caps, even though we haven't broken out in price yet, we have broken out the AD line, which I think is bullish. Looking at the sectors, energy and materials leading the action today. Everything else was either down or up very slightly. I can tell you utilities were the worst performer, even though they're not showing here on this summary. But energy up 2.3%, materials up almost 0.9%, both right near breakout levels. So really good action there. Within the energy group, coal has been really on fire here in May. We were down at 130 at the end of April. We hit 190 today. So from the end of April through today, which is 3 weeks, less than 3 weeks, 2.5 weeks, we've seen close to a 50% rise in the coal index. So big move there. Mining also very strong today. We're going to talk a little bit more about gold stocks in just a bit, but these two groups up 12.5% and 4.5%. And then non-ferrous metals also up nearly 4.5%. But this group had broken out, pulled back, and starting to strengthen again. All right, 10-year Treasury yield. I will say that on Tuesday, we do have April housing starts and building permits that will be released. The housing starts expectation is roughly 1.7 million units. March was 1,739,000 units, so we're looking for a little bit of a decline there. April building permits 1,780,000. March was 1,766,000. So while we're expecting housing starts to drop a little bit, we're expecting building permits to rise a little. So we'll see how things come out in the morning, but both of those numbers still are pretty strong, and they have been trending in the right direction. Looking at the 10-year Treasury yield, didn't really see much of a move at all on Monday. I think we still continue to consolidate between 150, 175. We're sitting almost in the middle of that area at 164, right on the moving averages or close to the moving averages. I think the next move is going to be to the upside, and I think the market is anticipating that, which is why you can see financials continuing to lead on a relative basis. Very, very strong market right now for the financials. All right, moving on, talking technically. So we want to get into these metals. So I pointed out that the mining stocks did really well today, and you can see here the price of gold went up quite a bit. It went up 1.6%, almost $30 an ounce to 1867. Now I annotated this for our members, so let me show you what I'm looking at here. In the short term, I think we still have some issues here on this chart. So I'm not really overly bullish, but you can kind of see that on a trend line basis, we probably broke just a little bit above, and I'm connecting closes. I mean, if I went up connected the intraday highs, it'd probably be a slighter breakout. But no matter how you want to slice it here, we did break out above the trend line, which was good. Now, the bad part of this was that I think there's still a little bit of overhead resistance that we need to negotiate. So there was a high back here in January, and then the next high down in here in February. I see a lot of congestion right in here after the drop that we saw back in early part of 2021, first half of January. When we bounced back, that reaction high came up to 1850 to 1875, that area. And so that's where we closed, 1867. So I'm looking at this and saying, well, we're looking better. There's no doubt about it. The PPO looks good. We're bouncing off the rising 20-day moving average, which is above the 50-day. All of these are really good developments. So I don't want to be overly bearish. I'm just still concerned about the longer term. So I'm okay with gold in the short term. I'm okay with many of these mining stocks for a short-term trade. But if they go against you, if they start to go against you, I would just be quick on the trigger to either take a loss or maybe a reduced profit and move back to the sidelines. Now, this is the daily chart. Let me pull up the weekly chart for you. The weekly chart, there's some positives and some negatives. Obviously, breaking, it looks like this trend line on a weekly basis. If we connect the candle bodies, we definitely broke out. We're above the 20, which is above the 50, and now the 20 is turning up. Still waiting on that cross on the center line, the weekly PPO. So there are some issues here still, but things have definitely improved. Now, if we were to reverse this week, go back down, close below that 20-week moving average, I would feel much differently. So that tells me we want to keep an eye on it, but it is looking a lot better. If we stretch this out 15 years on a monthly chart, you can see we had a huge move, pulled back, hit the 20 period or 20-month moving average, and we're starting to roll back to the upside. Now, on a monthly chart, if we do make this breakout, if we get back up to 2,000, 2,100, chances are it's going to come with a negative divergence on a monthly chart. So, and that doesn't necessarily mean that we go back down. If we break out and the volume is strong, then I'm not going to be as concerned about the negative divergence. If we break out and the volume is weak, and things picked up today, volume was pretty strong, or this month, I should say. So we're only at the 17th of May, and you can see we've almost already gotten to where we were in April. And if we go back to that weekly chart, you can really see the volume picked up here, right here. These volume bars are much higher than what we saw in March and April, especially April. So I like what's going on here in terms of volume and movement to the upside. I just, gold is going to be dependent on volatility and the dollar, weakness in the dollar. And I think with a secular bull market, when we do finally break out, I think volatility will get drained out of the market again, which is bad for gold. And I honestly think the dollar goes higher later this year. I'm still sticking to that at this point. And if that's correct, that's another negative for gold. That's why Intermediate to longer term, I'm a little bit more concerned with gold. Short term, I think it's fine. You can trade it. Just be careful if it does begin to break down. So let's take a look now. Let's go back to the daily chart here and take a look at silver. All right, so looking at the daily chart, you can see these highs on gold moving lower. Check out silver, because as you look at silver and copper, you're going to see a little different picture. Here we have equal highs, not lower highs. Silver to me looks much better than gold. We weren't trending lower and breaking down. Instead, we have been holding the lows from back in the late summer into the fourth quarter of 2020 that were established on silver, $22 to $23 on this silver contract. And that's continued to hold. And to the upside, we've got 29.30 as resistance. So I'm seeing more sideways consolidation here. Now, when we step it up and take a look at copper, I want you to see the difference here. Do you see how copper is trending higher? I mean, there's no doubt in my mind copper is much stronger than gold, which is typically what you see in a bull market. When that copper versus gold ratio is rising, that tends to be very, very bullish for equities. So let's get rid of this. Let me show you on a line chart. We'll go back a few years here. But this is, you can see copper versus gold rising. So when we were going through all the problems in the market, the trade war and the pandemic, look at copper downtrending versus gold. But when the economy is strengthening, when the global economic conditions begin to improve, that is always a good sign for copper, because copper is the metal that's in, all of the industrial work, the development that takes place around the globe. So when you've got copper prices moving up, that generally is a sign that the market is anticipating much more demand for copper. It's not only the increased demand, but the anticipation for even more demand. And then when you're in a solid bull market, gold tends to be ignored. And so this is the ratio that you tend to see. So as long as this ratio continues to put in higher highs, higher lows, that's likely to accompany a secular bull market. And so when I'm in this kind of a bull market, I'd be much more interested in copper and stocks that are involved in the copper area rather than gold, or just industrials in general. So anyway, wanted to kind of give you an update there on some of the things that we're looking at. Let's move on to break it down. So in break it down, I want to take a look at energy. And the reason I want to take a look at energy is since the vaccine news came out at the beginning of November, look at what energy is doing relative to the S&P 500. Now, it did pull back in March and into the first half of April, but now it's moving back up. We've seen the absolute breakout above the March high. All we're waiting for now is that relative breakout. And this would be a pretty big one, because coming down, I see a relative bottoming head and shoulders pattern. Left shoulder, neckline, head, right side of the neckline, right shoulder, and now we're moving up. So a breakout on a relative basis here in energy, I think would be really bullish. And the fact that we've already gotten the breakout above the March high on an absolute chart tells me that energy is probably an area that we want to continue to focus on. Looking at the areas, the industry groups within energy, first, pipelines. So we'll go through these and just point these out on both an absolute and relative basis. Pipelines, still not back to where we were pre-pandemic, but certainly making our headway there. Nice move up from that November vaccine news, and we've continued to power forward there, not just on an absolute basis, but also on a relative basis. We now have the relative price action above the 20-day moving average, or 20-week moving average, which is above the 50-week moving average. So that configuration, along with a relative PPO that's turned positive, tells me that right now we've got very solid momentum in the pipeline. So we look good there. Looking at coal, coal has just been really on fire. Another one of these bottoming of relative head and shoulder patterns. Shoulder, neckline, head, neckline, right shoulder, and a breakout. So coal looks really strong right now. Then we move on to the exploration and production area, and very similar pattern. Little sloppier head and shoulder, bottoming head and shoulder, but I still see one. A breakout above that early March relative high would be very bullish. And you can see we have cleared the March high, and we've also cleared where we were just before the pandemic set in. So this is a group that's definitely on the improve. Now, getting back to my earlier comment about the dollar, that's something that we're going to have to watch, because if the dollar strengthens and energy, these industry groups begin to roll over again on a relative basis, then we're going to want to reevaluate. Now, when I look at this, the oil and gas, integrated oil and gas, I'm not as bullish. And the reason being, I like to see in these patterns, these bottoming head and shoulder patterns, I like to see the right side higher than the left side. Because when you break out of this, we still haven't cleared this. If we go back and look at the prior, you see how the right shoulder is higher than the left shoulder? So if we break out above that, or excuse me, the right side of the neckline here, not the right shoulder, although the shoulders are higher, but the right side of the neckline is higher than the left side. So when we bounce off of this right shoulder, if we break out above that March high, we're now looking at over a year high. So many, many months relative high, which is good. When you get and you look at a pattern like this, however, if you clear the March high, you still have the June relative high from last year. So that's why it's just not as bullish a pattern. I like to see bottoming head and shoulder patterns where you actually pierce the left side of the neckline. So we haven't done that yet. I still think the chart looks good. We've got the configuration set up. I just don't think it's as strong as the other. So on a relative basis, I don't like it as much. The oil equipment services group, I think now just making another breakout. Still got a lot of work to do to get back to that February relative high. But when I look at where we were over the past, year, maybe even 14, 15 months, that this relative strength is beginning to show. And you can see that again in that PPO. So looking pretty good there. And in this particular one, I've got the renewable energy. This is actually in the technology sector, so we won't take a look at that here. But overall, I think energy looking pretty good. I don't have really any problems with any of it in the short term. I think they all look pretty good. Some, like I said, better than others. But I do think the market continues to favor energy, and we're seeing energy in the spotlight on the sector leaderboard quite often right now. All right, let's take a look at how you can look at individual stocks. So we have a platform here at Earnings Beats where we've got a number of different chart lists. So we do research, and then we put together these chart lists for our members to download into their StockCharts account. Or if they're not a StockCharts Extra or Pro member, they can view the chart list. They just can't download them into an account. But if you've got the chart list, if you're an Extra or Pro member at StockCharts and you're also an Earnings Beats member, and you download our chart list directly into your account, what you can do is you can go into these various chart lists that we've organized and put together. And if you hit this view all, it'll bring up all of the stocks in that chart list. And this is a strong earnings chart list. And then I go to summary. And what you can do is you can just type in energy. And also, let me get the columns here for you. Let's get sector and industry out here. So you can see anything that has energy in it will get pulled up. So you can see here, the technology, there's a technology stock because energy is in the industry name, renewable energy. So that's not exactly what we're looking for. And you can see it was the only one that actually went down. Everything else on this list went up today. These are all of our strong earnings energy companies. These are companies that when they reported their earnings in their last quarter, they beat Wall Street estimates, both top and bottom line. I find it much more advantageous to trade stocks that have beaten Wall Street estimates. I think Wall Street trusts management teams more if they come out and they beat their prior estimates. So I find it very useful, and you can see some really good numbers here. We could go into the strong earnings 2 folder, and you can see if I type in energy, we'll get the new list here. And again, almost look at some of these stocks, very, very strong. Every one of them up today in these 2 chart lists. Every energy stock that we had was up today. And then you go into strong future earnings. So these are stocks that either didn't beat Wall Street estimates. I mean, you still have strong companies out there. They don't, that didn't beat in their last quarter. So these stocks on this list could be those companies that missed on revenue or earnings, or they could also be preparing to report earnings here very soon. Because what we do on our strong earnings chart list is as companies get close to their earnings dates, usually within a couple weeks, we pull them off of that report, off of that chart list. And then this chart list, the way companies get added here, these are companies that have scooters that are at least a certain level and look pretty good on their charts, when I pull the charts up. And then I just go in and take out any companies that are on this strong future earnings chart list that are also on the strong earnings chart list. So I don't have duplications. So anything that's on this list should not be in the other two strong earnings chart lists. But we can come in here, type in energy. And again, look, I mean, Peabody, this is coal, up 32% today. But look at all these energy stocks. Now that's a material stock, but it's got energy in its name. That's why it got pulled up here. And there's, of course, renewable energy. But for the most part, these are energy stocks. 2 energy stocks out of this entire list, only 2 of them were down today. So if you were in energy, any of these energy names, you did well. If you're in any of these near the top, obviously you did extremely well. Then we have a raised guidance chart list. So pulling up raised guidance. So any companies that have raised their guidance, pull up energy. Okay, there's 4 of them. 3.7%, 2.5%, more than 2%, and 1 here that's fractional gain. The last one, renewable energy. So the quality of the combination of the platform at StockCharts with the platform that we offer and the research work that we do at Earnings Beats, I think is second to none. And we do have 2 webinars coming up the next 2 days, just to let you know. We have our monthly Max Pain, where we look to see which stocks might have short-term moves, either higher or lower based on where they're positioned, looking at all their different option strike prices and so forth. A lot of times it's, there's a lot of money on the table for market makers as we get close to option expiration, which is this Friday. So we do a dedicated webinar once a month, the Tuesday before the 3rd Friday, which is always the Tuesday before options expire, to take a look at that scenario just to see if there are some potential trades that might work out. So that's Tuesday. And then on Wednesday, we have our draft where we select 10 stocks for each of our 4 portfolios. All 4 portfolios have crushed the S&P 500 over the period of time since their inception. So if you're interested in either of those or both of those events, make sure you go over to earningsbeats.com. I'll pull that up. You can just click on that join today, and you'll be able to get whatever you need there. All right, let's keep moving. So move on to the earnings spotlight. And what I thought I would do, first of all, Tencent Music Entertainment Group reported after the bell. They just met expectations. It was pretty flat after the bell, from what I could tell. I didn't really see a big reaction in after hours action. I would expect, honestly, this is a stock that's been beaten up a lot. Maybe a relief rally to at least the 20-day moving average is maybe what I would look for. So that could take it up a buck and a half. And then we'll see technically whether or not we can get through. Also, when we broke down here, we did so below this mid-April low, which is near $17. So I think the combination of that price resistance and the 20-day is going to make it a little difficult for TME to establish a close back above that level. If we could, that would at least be one step in the right direction from a bullish perspective. All right, here's a stock after hours. They were expected to lose 13 cents. They actually made a profit of 3 cents. So they beat by 16 cents. Stock's down 10.5% after hours. It's been beaten up for the past few months, along with many of the growth stocks. And it's in the computer hardware area, which has been beaten up. You can see since January, computer hardware has been falling versus the S&P 500. So it's just not in a good group. I think at halftime, it doesn't even matter what the numbers are. When the market is selling certain areas of the market, if you get a gap up in that area, probably the best thing to do is take it, because the majority of these stocks are selling off after they come out with their earnings. Now, we do have some earnings reports coming up later this week that I think are worth mentioning. First is Walmart. They are going to be out on Tuesday, I think in the morning. So they'll probably be reporting or have reported by the time you get this recording. Walmart, when I look at it, I'm not really seeing anything that I like on the chart. So I think they're going to report good numbers. I just don't know if it'll be good enough to really jumpstart it. We'll see. Home Depot. Home Depot has been very strong, had a huge run up heading into this earnings report. So I believe you're going to see a really good number out of Home Depot. You can see on a relative basis, it's now trading at about a 5-month relative high to its home improvement peers. So I expect that we'll see a good number here and probably begin to make a move back up toward the 340. I wouldn't rule out a 50-day test first, but I do think the odds favor a move back to the upside. NetEase reports tomorrow, and NetEase has been downtrending for the past few months. And if you look relative to the internet group, it's not too far off its 52-week low. So I would say the market's not expecting anything great here. Prior high in August last year was right at about 103, and you can see these lows coming down between 100 105. So this is an area I think that needs to hold on the stock. If it doesn't, I would expect to move down to maybe around 85. All right, Wednesday we got Cisco coming out. So Cisco will be out on Wednesday. AD line looks good. Price action looks good. Relative strength has been pretty good. This is the highest it's been probably in about 10 months. So Cisco, I expect a good report out of. Others that'll report that day: Lowe's, Target, TGX, Synopsys, VIP Shops, Keysight Technology, so forth. Thursday, we got Applied Materials. So I'll show you this one. Semiconductors have been struggling of late. You can see here, semis going down for the past 5 weeks or so. AT's been going down, but on a relative basis, it's held up pretty well. So I know semiconductors are going to be looking to AMAT maybe to right the ship. I think the numbers will be strong, but will it matter? We're going to find out on Thursday. Friday, Deere reports. So I'll give you that last one here. Deere's been looking great for quite a while. Whoops. There we go. So the action's been strong. Relative strength has been off the charts, really positive. It's been one of the best companies out there since the pandemic really began. So I think Deere is going to have a good report, but will it matter? You know, it's come up so much, I don't know. But I do expect a good report. All right, 3 you must see. I'm going to give you 3 companies to think about on pullbacks here. MoneyGram, after moving up in February, has pulled back. It's trying to get through 9. I love the volume that came in, pulled back and is testing the 20-day. Let's see if it can bounce off of that. FHI is your second stock. This one had broken out above the prior high, just below $32. And guess where we just came back down? We were down 4% on Monday, just below $32, near that 20-day moving average. Watch it there. And then the last one I have here is Albemarle, ALB. I see it's starting to move up, lower highs and higher lows. So we're squeezing in this triangle. Can we make the breakout? I think we will. But, and keep an eye, too, because it was a relative leader when it set the high back in January, and it's been struggling since. But we may be starting to make that turn back up again. All right, that's it for me. Everybody have a great Tuesday. Really appreciate you tuning in. I'll be back on Wednesday over at Earnings Beats for your next Trading Places Live. Have a great Tuesday, everybody. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.